It's Monday, September 8th, 2025, and the pre-market is already buzzing. This is where we see the first reactions to overnight news and earnings. Your early look at the market's mood. The pre-market is a crystal ball, showing which stocks are hot and which are not. Today, futures are pointing higher. Nasdaq up 0.31%, S&P 500 up 0.2%. Optimism is in the air, but don't get complacent. A positive open can flip fast. We're seeing surges in AI chip demand and big investment moves from American companies. Meanwhile, companies missing guidance are getting punished. It's growth versus fear, and it's all unfolding now. Grab your coffee. Let's dive into the names you need to know. The biggest story in the market right now? It's artificial intelligence, an unstoppable force that's transforming everything from how we work to how we invest. AI is the engine behind the latest tech boom, and it's creating new winners and losers every day. And right at the front of this revolution is Broadcom, ticker symbol AVGO, leading the charge with innovation and execution that's turning heads across Wall Street. Broadcom shares are up over 13% pre-market, after absolutely crushing earnings expectations and locking in a staggering $10 billion in new AI chip orders. That's a massive vote of confidence from the industry. One of the biggest drivers? OpenAI is reportedly a major customer, fueling the frenzy and putting Broadcom at the center of the AI universe. Analysts are scrambling to keep up, racing to raise their price targets. JP Morgan just hiked its target to $400 and others are following suit, citing Broadcom's unmatched momentum. Broadcom stock is now up 32% this year alone, and investor sentiment is absolutely off the charts. The excitement is palpable and everyone wants a piece of the action. The AI theme is the most powerful force in the market right now, and Broadcom is emerging as the clear winner, setting the pace for everyone else. Compare that to C3.ai, which just plunged 12% after missing earnings and pulling its guidance. It's a stark reminder that not every AI name is a guaranteed success. The market is making it clear, it wants proven winners with real, tangible orders, not empty promises or hype. Execution is everything in this new AI era. In the world of AI, it's all about who can deliver results, scale up, and turn vision into reality. That's what separates the leaders from the laggards. Today, Broadcom is the name to watch, setting the standard for what it means to win in the age of artificial intelligence. Now Apple, ticker AAPL, the world's biggest company, is making headlines. The stock surged over 5% after news of a $100 billion investment in U.S. manufacturing, on top of previous commitments. This move helps Apple dodge tariffs and strengthens its supply chain. Tim Cook is playing chess, not checkers. Bringing production home means more control and less risk. It's a vote of confidence in the American economy and a smart business move. Investors see this as de-risking and Wall Street is rewarding it. Apple's bet signals strength for the entire U.S. tech sector. When the biggest company doubles down on America, it's a bullish signal. Leadership like this sets the tone for the market. Don't ignore Apple's message. Not every tech giant is winning today. Salesforce, ticker CRM, is under pressure. Once a darling of the cloud software world, Salesforce is now facing a reality check as the market's mood shifts. Investors who once cheered its rapid growth are now scrutinizing every detail, looking for cracks in the story. Despite beating on revenue and profit, the stock fell 7% on weak guidance. That means Salesforce made more money than expected, but its forecast for the future wasn't as rosy as Wall Street hoped. In today's market, that's enough to send shares tumbling. In this market, perfection is expected. Any hint of slowing growth gets punished. Investors are demanding not just strong results, but also bold promises for the quarters ahead. Even a small stumble can trigger a big reaction. The market is forward-looking, and Salesforce's cautious outlook spooked investors. When a company signals uncertainty, even subtly, it can spark a wave of selling as traders rush to avoid potential disappointment. It's not just Salesforce. GitLab dropped 8% after light guidance and a CFO exit. Leadership changes and conservative forecasts are red flags in this environment, making investors even more jittery. Figma, fresh off its IPO, fell 15% after a lackluster debut. Even newcomers aren't immune. If you don't wow the market right away, you risk being left behind. The lesson? In today's market, you must deliver profits and promise more growth. It's not enough to just meet expectations. You have to beat them and raise the bar for the future. If you can't clear that high bar, the market shows no mercy. The consequences are swift and unforgiving, with stocks dropping in a matter of minutes. Second-tier tech names are feeling the heat. The pressure is on for everyone, not just the giants. Smaller players are struggling to keep up as expectations soar. Investors are rotating out of laggards and into proven winners. Money is flowing toward companies with a track record of execution, and away from those seen as risky or uncertain. The bar for tech is higher than ever, and only the strongest will clear it. In this new era, delivering results is just the beginning. The real challenge is convincing the market you can keep winning. Let's look at two other movers, Nutanix and United Parks and Resorts. Nutanix, ticker NTNX, is up over 3%, not from earnings, but from being added to the S&P Midcap 400 index. Index funds now have to buy in, creating a wave of demand. Even with cautious guidance, technical factors are driving the stock. It's a reminder. Sometimes mechanics matter more than fundamentals. United Parks and Resorts, ticker PRKS, is up 4% after announcing a $500 million stock buyback. Buybacks reduce shares and boost earnings per share. Wall Street loves it. Both moves show how financial engineering can move stocks. Watch for these catalysts. They can give you an edge. Booyah! Don't forget the macro picture. Trade, inflation, and jobs are all in play. These three forces are the heartbeat of the global economy, shaping everything from the price of your morning coffee to the health of the job market. As we look ahead, the interplay between these factors will be crucial for investors, businesses, and everyday consumers alike. The US and Japan are close to a deal lowering auto tariffs, boosting Toyota and Honda. This agreement could make Japanese cars more affordable for American buyers, while also strengthening trade ties between the two countries. It's a win for automakers, and could set a precedent for future trade negotiations. But new tariffs on India and threats against Switzerland add uncertainty. These moves could disrupt supply chains, raise costs for importers, and spark retaliatory measures. For global businesses, the shifting landscape means adapting quickly to new rules and risks. Trade battles can create winners and losers overnight. Companies and countries that adapt fast may benefit, while others could face sudden setbacks. The stakes are high, and fortunes can change in a flash. This week, all eyes are on inflation data. CPI and wholesale numbers will guide the Fed's next move. Investors are watching for any sign of rising prices, which could force the central bank to act. The data will influence everything from interest rates to mortgage costs. Hot inflation means higher rates and pressure on stocks. Cooling inflation could spark a rally. If prices keep climbing, borrowing gets more expensive and markets may stumble. But if inflation cools, optimism could return, lifting stocks and boosting confidence. Jobs data is also key. The labor market's strength keeps inflation sticky. When more people are working and wages rise, spending increases, which can keep prices elevated. The Fed is watching employment numbers closely to gauge the economy's true momentum. New leadership at the Bureau of Labor Statistics means all eyes on the numbers. Fresh perspectives could bring changes in how data is reported or interpreted, adding another layer of intrigue to this month's reports. Trade, inflation, and jobs will set the tone for the month. Stay alert. Macro moves matter. Whether you're an investor, a business owner, or just keeping an eye on your wallet, these trends will shape the economic landscape in the weeks ahead. Minutes to the opening bell, here's what to watch. First, the AI sector. Broadcom leads, but will others follow or fall behind? Second, megacaps like Apple. Does its big bet lift the whole market? Third, watch software names like Salesforce and GitLab. Do they recover or keep sliding? Fourth, keep an eye on Nutanix and United Parks. Do technical catalysts keep driving gains? And finally, monitor every macro headline: tariffs, inflation, jobs. The CPI report is this week's Super Bowl. Watch the leaders, the laggards, and the big picture. Get ready to make some money. Booyah!